Hey guys, it is Julie here with TipRanks, and today we're taking a look at a few recently changed ratings on three major stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. In just the last couple of days, we have had several analysts change their outlook on three major stocks, including Tesla, Google, and Meta Platforms. Now, some of these have been an upgrade, but others downgrades to the stock ratings. So we're going to take a closer look at these ratings and the reasoning behind them, what the stock has been doing lately, and of course, how other Wall Street analysts weigh in. Just before we get into that, this is a heads up that TipRanks is having a fantastic sale right now. So if you're wanting to unlock some great research tools, now is the time. You can follow the links down below to get 40% off when you upgrade to premium. Plus, you can get 50% off a newsletter of your choice that includes our Smart Investor and Dividend newsletter. So follow the links down below. Now we're going to jump right into things with the crowd favorite, Tesla. The Tesla stock, of course, trades under the ticker TSLA, currently priced at $244 per share. Now, their stock did see some declines at the end of 2022, but so far in 2023, they've made astounding growth. They're up 126% year to date and 27% in just the last few months. But this past week, we're finally seeing them take a little bit of a dip, down nearly 4% in the last 5 days. The Tesla stock has always had Wall Street analysts divided. We always have a wide range from our low-end to high-end price targets and a mix of buys, holds, and sells. But in the past week, we've had a few analysts downgrade their buy ratings to holds on the Tesla stock. Looking at our detailed list of analyst forecasts, just today we've had a mix of buys and sells coming in. Bernstein came in with a sell rating and a downside of nearly 39%, while Piper Sandler is feeling more optimistic, giving the stock a buy with an upside of 14%. But looking a bit further back a few days ago, we did have several companies downgrade their ratings. That included Morgan Stanley and Goldman Sachs, both coming in with hold ratings on the Tesla stock. The Morgan Stanley analyst noted that they see Tesla as both an AI beneficiary and an auto company, and that high expectations on the former has brought the stock to a fair value. Jonas said that he wasn't trying to call the end of the Tesla rally, and that Tesla is a must-own EV stock. The analyst from Piper Sandler that reiterated their buy rating said they wouldn't be surprised to see profit-taking in the coming months. Analyst Alexander Potter likes Tesla stock, but he's showing some caution ahead of the company's expected delivery report this weekend and into the balance of the year, saying that regardless of the outcome this weekend, we wouldn't be surprised to see profit-taking in the coming months, given the stock's recent outperformance, as well as the likelihood of operational hiccups. And Baird analyst Ben Callow also stuck to their buy rating today, saying that Tesla remains as one of their best picks for the year. He did also say, though, that we think sentiment heading into the quarter is negative and the stock likely to trade down into the quarter, which should be a low point for gross margins. Although we are cautious into the print, we think it will be a de-risking event and buyers are likely to step in following results. They are advising investors to wait for their second quarter deliveries, which are due out on July 3rd. Overall, the Tesla stock has 31 analyst ratings, coming in as a moderate buy with 13 buys, 13 holds, and 5 sells. The average price target of $220 would be a downside of 10% from current prices, and we can see that wide range here with a low of $85 all the way up to a high of $335. And looking at our list here, that $80 price target is from a while ago from Craig Irwin, so a downside of 65% 2 months ago. A lot of our older ratings do have some pretty big downsides, including some of the buys, since the Tesla stock has seen so much growth recently. But we do have some double-digit upside potential within the last couple of weeks here as well. The next stock that is moving following a new analyst rating is Meta Platforms, and their stock is in the green today. Meta Platforms, under the ticker META, is another stock that has been on a tremendous rally this year, currently priced at $287. They kicked off a growth period back here in November, up 69% over the past year, with growth of 145% in the last 6 months. Now, unlike Tesla, the Meta Platform stock has not seen downgrades. Rather, they have received a new buy rating today, along with some upgraded price targets in the last few. So you'll see a lot more positive upside here in our detailed list of analyst forecasts. Within the last couple of weeks, pretty much nothing but buys. We do have one hold here from 20 days ago. But just today, we got a buy rating from Citi with an average upside of 25%. The Citi analyst noted that both engagement and revenue-generating activity on Instagram are on the rise. He highlighted that Instagram users are devoting more time to the platform, even though TikTok still dominates in terms of total user hours. With 7 months of consecutive growth in user hours, Instagram is slowly closing the gap. Their Instagram Reels feature is also garnering more attention, with 17 to 18% of its content now composed of ads. And then we have UBS, who reiterated their price target yesterday, along with increasing their price target from $300 up to $335. They said that they believe Meta will increasingly be viewed as an AI winner, providing another leg to the bull case. There has been chatter of Meta AI tools, but investor conversations have focused narrowly on the ad tech angle, less around consumer applications that could drive new engagement and ad units. We do not think this is priced into shares currently. Overall, the Meta platform stock has 41 analyst ratings and comes in as a strong buy with an impressive 36 buy ratings, 5 holds, and 0 sells. Their average price target of $293 would only be an upside of 2%, but if we look down below, we can see all the recent ratings within the last month have a bit more bullish outlook, including some of those with double-digit upside potential. The reason for the low price target is a lot of our ratings are over 2 months old, and with all the growth that the Meta stock has seen lately, it's already surpassed or come close to those price targets. And third on our list with some recent analyst activity is Google. The Alphabet stock trades under the ticker GOOGL, currently priced at $118. Now, they have seen some more ups and downs this past year, and overall are only up 2% over the last year, but up 35% in the last 6 months. While the Google stock still has plenty of buy ratings, they were recently downgraded to hold ratings from 2 analysts just yesterday. And those downgrades came from Bernstein and UBS. They both came in with a new hold rating, though their price targets do still have a slight upside potential. Looking at the rest of the list, yesterday we also had a buy rating from Bank of America with an upside of 8%, and a couple weeks ago we have a few mixes of buys and holds. The Bernstein analysts voiced their concern over Google's aggressive implementation of generative AI into their search results. He believes that could impact short-term ad pricing. He acknowledged his optimism for a recovery in digital ads, but expressed that increased competition from retail media, market share that's shifting back to Meta, and certain pressures from generative AI could stifle near-term search growth. They also highlighted that YouTube platform is getting a smaller piece of sluggishly growing pie and an increase in regulatory scrutiny that cannot be overlooked. And the downgrade from UBS also echoed a similar sentiment regarding AI integration into their search engine. They warned that this integration could displace paid advertising, saying that their concern is that if the user query is answered by the AI, they no longer need to click through to the original website. They added that we do not think the full historical premium is warranted considering the magnitude of uncertainty associated with Gen AI and our outlook for slower growth of 8% over the next 3 years. Overall, the Google stock currently has 31 analyst ratings, coming in as a strong buy. That breaks down to 27 buy ratings and just 4 holds, and an average price target of $131, which would be an upside potential of 11%. Now, as I said, even these recent hold ratings do have some slight upside. On the low end, we have a hold with a downside of about 1%, and others all around that double-digit mark with some as high as 35%. So overall, some still fairly bullish outlooks here. So now you are up to date with some of those recently changed ratings from Wall Street on these giant stocks and the reasonings behind them. Let me know your opinions. Do you agree with these analysts or not? And which of these stocks do you still think has some great growth potential ahead? I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, just keeping you up to date with what these Wall Street analysts are up to and providing some information and entertainment. Make sure you always do your own research and due diligence. If you made it to the end, don't forget to hit that thumbs up button, check out the TipRanks sale in the comments down below, and make sure you're subscribed to the channel. Have a great day, and I'll see you back here next time.